Okay, looks like we've reached our maximum number for people for the webinar, so we get a sold-out show, people. Well done, congratulations. Welcome to our presentation today. The topic today is trading for a living, so obviously, as I mentioned now, is that it looks very popular. Here's my agenda. We're going to go quickly, just a brief introduction. I know a lot of us want to leave our jobs and go trade for a living full-time, but before you do that, there's some things you take into consideration. A lot of people always ask us how much trading capital do I need. The short answer there is how long is a piece of string. So it's a challenge. Then we're just going to discuss some of the options we've got available at PSG, what people would use for trading. And then this is old stuff I've used before, the 3 M's, because that's the foundation of trading, the mindset, the methodology, and also the money management. And we're going to go quickly touch on the trading plan. I think anybody that wants to become a successful trader needs to have a detailed trading plan. So we're just going to have some ideas from that. And like we do with every webinar, this webinar is being recorded. I've learned now the last three times that we had webinars, I will not have any more polls, because obviously my screen freezes or your screen freezes, and we end up just having an audio. So I'm not going to put out any polls and things like that. It's a pity, because it gives me some interaction with you guys. But let's get into it. So the presentation is recorded and it is being sent out. Any questions you have, can you just type it in the box and do it from there. Before we get going, just can I just do a quick sound check? Can you guys hear me clearly? You can just type in the question box. Yes, no, all good. Okay, great. Thanks, Hans. Okay, good. Let's get into it. So, as I mentioned before, a lot of us want to go trade full time, and obviously with the technology we have nowadays regarding 3G or 4G and ADSL and things like that, is much easier. I remember when I first started, obviously it was dial-up modem. My biggest expense was Telkom. Number one. And number two, obviously the financial instruments we have nowadays also makes it much easier for people to go trade. And obviously one market is the same as any market. You can trade here, you can trade anywhere in the world. Okay, so here's a little quote, and this is where I got the topic from a book. It's called Trading for a Living. It's written by Dr. Alexander Elder. And by the way, if you click on this link, you'll have the PDF version of this book available on the internet for free. Anyway, here's an excerpt from that book. You can be free. You can live and work anywhere in the world. You can be independent from routine and not answer to anybody. This is the life of a successful trader. And I think a lot of us would aspire to that, be able to work from home, not have to commute, fight that traffic, the e-tolls, all that kind of stuff. So, that's a quick introduction. But saying that, a lot of people have the view that you need a lot of money to trade. And it's often viewed as a high barrier to entry. It's not really like that. As I mentioned just now, with the kind of products we have nowadays, it makes it much easier. So anyone with ambition or patience can become a trader. Okay, you can do it for a living, even with a little bit of money to get started as such. There are different avenues. We'll talk about the different options just now. There are very different options. You can go start your career. You trade index, you can trade forex, you can trade derivatives like CFDs and single stock futures. But most of them, all these derivative products, the main thing there is that being a derivative product, we're using gearing or leverage. So you just need a small amount of money to give you that full exposure to get started. And that's the initial margin is basically what they call a good faith deposit as your commitment to the trade. Okay, so that's what makes it much more easier for people to get involved in the market now, because it's simpler, easier, faster, and things like that. But saying that also, it's not an easy business. I always say if it was easy, everybody would be doing it. Okay. Obviously, there's a lot of risk involved. You need to know what you're doing, but also for the long haul, you need to be disciplined. It's tough for the long haul. So your success ultimately also depends on you. I was in Cape Town last night, and I was at the airport this morning, and I was going through YouTube videos. I just typed in, and I suggest you guys do the same thing. Type in the topic, trading for a living. It's amazing how many videos are available on the web. So it's some interesting viewing and things like that. Some of you know that I attended a course about 2 weeks ago with a guy called Courtney Smith. He came out from South Africa. one of the top traders in the world, multi-millionaire from trading. He was a hedge fund manager, he was a mutual fund manager, and also had a very successful stock picking newsletter. He had all those at the same time. Okay, but Courtney came out to South Africa 2 weeks ago, and it just coincided, dovetailed with this topic, and I learned a lot from him. Obviously, a lot of different strategies out there, but he stressed the whole time, money management. He's very risk averse. So ultimately, it all depends on you. Okay. So, can you trade for a living? Can it be done? The answer is yes. Okay, but the challenge is, what is living for you? Do you need 50,000 to survive for the year, or do you need 500,000 rand a year? So we do not know how much money you have, number one, and number two, how much you want to make from each trade. So those things makes it a bit difficult. Right? There's no one size fits all. Okay, one trader, on the other side of the coin also, one trader with enough knowledge and experience might risk more on a trade and make 100% on his money. Another might be more risk averse and risk less and only make 30% a year. Okay. Those of you who have been on my webinars before, we talk as an investor, you want to make 15% per annum. So with a 3-year view, 50%, and then 2 to 5% on top of that with dividends. With trading, our aim is to make 15% per month, okay, on your trading capital. So you need to decide how much you need income-wise per month, and then obviously how much starting capital you need from that. So there'll also be times where you'll have a losing year. Yeah, and I was amazed when Courtney Smith told me that he told us that he made losses also in the beginning, big losses. And by the way, Courtney Smith mentors some of the top traders in the world, the Marty Zwiggs and Paul Tudor Jones and things like that. So this guy knows what he's talking about. So it's part of the game. You know, you could have losses for the year. It does happen to the best. Okay. So the main thing, as I mentioned just now, your success depends on you, number one. Number two, can you follow a system to make your goals happen? Yeah, so it depends on your self-discipline. And that's why the trading plan is so important. Whether you have that needed desire also will help you. Okay. The bigger the why do you want to get involved in trading, the easier the how. Okay. So the idea, and this is what I've learned from Courtney, and there's a lot of books I've read. I read a long time ago about a group of guys called the Turtle Traders. They had a definite trend-following, loss-limiting trading methodology. And that's the kind of stuff that I like to use. Okay, there are different strategies out there, but the whole idea is that we don't need to spend a lot of time. That's what one thing I heard, what really knocked the socks off me with Courtney Smith's trading strategy. He trades for 15 minutes a day. And I thought, wow. Okay, so that grabbed my attention. So the whole idea is you do your initial homework and things like that, and now you do any action if the evidence requires that. So, you know, you spend 1 or 2 minutes per share checking, do I need to adjust my stop? Do I need to adjust my take profit level? If not, then leave it, you know. So only if there's action required. So that's, you don't have to sit and hover over the market the whole time. You don't need to hover like day trading. Obviously, a day trader is totally different. We're talking more about the swing traders. And most of you on this webinar today do not have the time to be day traders. Most of us have full-time jobs, and swing trading fits us fine. You know, swing trading, hold a position maybe on average about 12 days. You look at the trades at night, place it on the system, and maybe spend 15 minutes in the morning. That's it. So the top traders in the world, as I say, manage to trade between 10 and 60 minutes a day. My goal is to get to 15 minutes a day. Okay. So from a time point of view, that's your most important resource, is how you spend your time. But then from the rest of the time, you can enjoy life. Okay. Carry on doing what you want to do. Okay. So the big question is, how much trading capital do you need? Okay. If you've got a lot of overheads, you know, that's going to be at the back of your mind the whole time. Gee, I need to trade. I've got a bond to pay and school fees and things like that. So as a starting point, I always suggest that try and get rid of the bad debt, the credit cards, overdraft, and all that kind of stuff. Number one. Number two, obviously you want to set aside, I don't know how to call it, a rainy day fund, but you need to have some living expenses aside for 6 months. Something happens, at least you've got that cushion. Remember that 6 months income, that excludes your trading capital. That's over and above your trading capital. You've got more than big, high expenses, they set more aside. Okay, a year's supply of monthly expenses. Okay, so the whole idea is you want to provide a cushion. Something goes wrong if you're trading, as I say, you will have losses. At least you've got something to fall back on. Okay, so how much capital do you need? It also depends what you're going to trade. In this context today, we're going to talk about CFDs and single stock futures. You know, some of you might want to look at trading the index futures. Now, you're talking about 43,000 Rand margin. Most of us don't have that. You want to trade currency futures and things like that. Yes, much less margin, but that takes more time. So just to simplify it, I'm going to concentrate on CFDs and single stock futures today. But saying that, in the presentation Cape Town last night, I suggested starting with 100,000 Rand starting capital. But let's say, for example, you've only got 5,000 Rand. With one loss, you're out of the game. Okay? Because your CFDs at PSG, your minimum exposure is 25,000. So if you want to trade a top 40 stock, your initial margin is 15% of that 25,000, which is 3,750 Rand margin. So that's your initial margin. And what about your variation margin on a daily basis? So you haven't got much room to spare. You're going to be out of that trade very quickly. You're going to trade the next 60 companies or the mid caps, you need 17.5% margin. So, you know, as I say, 5,000 Rand, you're very limited. The idea is that the more margin you've got, just say you're starting with 100,000 Rand, number one, you got flexibility. You'll have more positions on. You'll be able to handle the margin calls and things like that, drawdowns, all those kind of things. But what happens if you were to trade a share like Naspers or Aspen? Okay, with 5,000 Rand, you know, you'll give you that 25,000 Rand buying power, but you only buy 57 shares of Aspen. This morning they were trading at 435 Rand a share. Now, to trade one contract, you need 100 shares. You won't be able to open up a contract on single stock futures of Aspen, and neither would you be able to do it with Naspers. Okay, so the idea is to, as a starting point, a guideline, you want to be able to trade between 250 and 500 shares of your most expensive shares that you ever plan to trade. And we'll go through the process just now, how to choose the delegates, or you want to call it the participants, or the trades you want to put on. Okay, but let's say, for example, you want to go trade some Naspers. So in our example, you have 250 Naspers, and the current share price is 1,689 Rand. Your exposure is 422,000 Rand, 15% margin. You need 63,000 Rand initial margin to open up that position. So over 100,000 Rand, yes, you'll be able to do it. Okay, so that's why I say it gives you that flexibility, gives you that freedom and things like that. So how much money do you need in your trading account? You need a bit more. Okay, I suggest is that you want to be able to have a peace of mind, and you got your bank account and you got your trading account, and I suggest, going on the guidelines we spoke about just the year or the 6 months, add another 20% on top of that, just to give you that cushion. The main idea is that you do not want to have these money problems with voices talking to you in the back of the head. Before joining PSG, some of you know that I was trading from home. I did it for a year. Remember, this was way before that we had derivatives. You know, we were trading equities. In those days, we had 7 days to settle. I had my profits. I was paying for my costs. I was trying to make 2,000 Rand a day. The goal was to trade in the morning and play golf in the afternoon. But I can tell you now, it was stressful in the sense that I didn't have the money to trade. I had my profits to pay for the costs. Thank goodness I had a friend of mine working for Apps those days who allowed me to have those big positions open. So there's, at the end of the month, I could pay the bills and things like that. But I couldn't sleep at night. So it's not much easier. Obviously, just after that, they introduced warrants. Remember, those days you could only trade equities. What happens? We had a bear market or a healthy correction for a while. You couldn't trade anything. You had to sit in cash. Now it's much easier. You can go long and short. You can take advantage of falling markets now also. So thank goodness I had the cushion in place. That's what kept me going. Okay. So that's something I've learned along the line. So what are your trading options? So yes, I'm going to touch quickly on the Aussie. I mentioned just now. If you want to trade the index futures now, our initial margin on trading the top 40 index is 43,000. That gives you exposure of 439, 10 times the market. It is cheap. It only costs you 25 Rand per leg. And obviously, for the day traders, you're looking at 10 Rand a point. So if it's 25 Rand in and 25 Rand out, so we're talking about 5 points. The guys will try and do a trade to grab at least 105 points per trade. And you do that 3 or 4 times a day, you know, after your cost is 1,000 Rand. So let's say, example, you do that grab 100 points every day, a week, it'll be 5,000 Rand for the week, 20,000 Rand for the month. So it is possible, but you know, there's no guarantees you'll be able to do that all the time. Okay, that's working on a 100% win ratio. On the currency futures side, I'm just saying if you want to trade the US dollar, your initial margin there, 1,560 Rand, so obviously much less. Your exposure is 1,000 of the underlying times. This is on 3 days ago, and the exchange rate was 11 Rand 44. Your exposure is 11,444 Rand. It's also very cheap. If it's a day trade, you only pay 18 Rand, so 9 Rand per leg. So again, in this scenario, you can easily make it 1,000 Rand per trade. But the thing is, with currency futures, you do not have so much volatility as we have with the index futures. So to make that 10-cent point, that 10-cent move, okay, it would be much harder to do. So you need much more contracts to justify it. So that's a challenge with currency futures. So let's talk about CFDs. I want to go buy some MTNs. Okay, let's say I go buy 313 MTN shares. And by the way, this is part of the trade we put on out on Tuesday or Thursday last week. You'll see on the next slide what I'm talking about. How I got to 313 shares. Anyway, that was the share price on Thursday. That's my exposure. Let me just get my cursor here quickly. Okay, so 313 shares times the share price, that's my exposure. That's a top 40 stock, so I need to put down 9,601 Rand margin. My cost, 0.4%, okay, plus VAT on top of that, that's the cost. Obviously much lower than trading equities. Let's say we go sell now, okay, we sell it at our target price, and you'll see on the next slide how we got to that target price. In between, so my potential profit in this scenario was 3,649 Rand. That as a percentage of my margin, my 9,000 Rand, had a potential of making 38%. Now, this trade can be 2, 3, 4 days, okay? The average trade we always put out on swing trades is about 12 days. But now, if you can make 3,000 Rand and you do that 4 or 5 times a month, okay, that's a nice, healthy part-time income. That's another thing before quitting your job. Obviously, you want to do this part-time. Until such time, number one, you have the confidence in your stock picking abilities, the confidence in your trading plan, but also to be in a situation where it's easy to transition from part-time into full-time. So, you know, don't just go trade for a week and you think you're a guru. Trade for at least a year. You know, as I say, it's not, if it was easy, everybody would be doing it. So, I hope that also helps you. Anyway, in this scenario, after costs and things like that, we're still making 30% on this trade. So how do I get what we're talking about in this trade? Let me just go back to my thing here. We put out a daily investment update last week. This was the 22nd. That was on Thursday on MTN. We went long, and this is what the document looks like. And by the way, all this information is available on our website. Before logging in, there's a button called Resources. You have to click on News and go look for the daily investment update. Anyway, this is the trade we put out. My entry price, my target price, my stop loss, exactly all the stuff we just spoke about now. Okay? And that's going with what I'm talking about. By the way, this is what we talk about, risk management. We talk about the 3 M's just now. This is the money management part. So we're talking about stop loss net. That's the risk management part. The money management part is the position sizing that you work together. Going back to my example with 100,000 Rand, okay, you should never risk more than 2% per trade. So 2% of 100,000 Rand is 2,000 Rand. I take my stop loss, which is the difference between my entry level and my stop. In this situation, it's 631. Sorry, 638. Take that, divide it into my 2,000 Rand. In this situation, I can go buy 313 shares. Okay, so if it's a CFDs, 313 CFDs, or if there's a single stock futures contract, 3 contracts. Remember, each contract is equal to 100 shares. Okay, so that's where I got that all from. Margin requirement, 400. If this was a single stock futures contract trade, 413. 4,119 Rand per contract. We've got 3 contracts. That's my exposure. Sorry, my margin. That's my exposure. As you can see, the gearing. Okay, so for every 1 Rand movement on the underlying MTN share price, my CFD or my single stock future goes up 4.96. So that's what also makes it interesting for the investor. By the way, you can see the technicals here. In this scenario, we're talking about bouncing off a retracement level. We're bouncing off support. And technically, we ever sold on the 2 oscillators. That's how the trading methodology. Okay. So let me just move forward quickly. How are we doing for time? Okay, we're running out of time here. Let's go through this very quickly. So, on the single, this is a trade we put out on Friday on Anglo Gold. Okay, so same scenario. We had a very bottom line. We're making 2,910 rand on our trade, 51% on our initial margin of 5,000 rand. Okay, we'll go through very quickly. That was a deal. By the way, when you get this presentation, obviously you can go into more detail. Okay, so that's the margin requirement and the options available. So yes, it is much easier to make money now. CFDs and single stock futures are great for the man on the street like us to have access to the market and trade. Okay, so let's talk about the 3 M's, and this is all part of Dr. Alexander Elder. He writes a lot about this, and I suggest you guys get it. We spoke already about the money management, the methodology, and the mindset. Let's quickly just touch on the mindset, your attitude towards trading, what happens if you lose, how you react to those losses. So if you anticipate losses as part of the game, so you don't throw your toys out of the plan, we learn from it, we move on. That's a good attitude to have. So the main idea is to have self-confidence. As I say, do it part-time. If you're first starting out, you're complete novice, I suggest you do some paper trading, what-if scenarios, do some simulated tradings. The whole idea is that you want to build up a belief in yourself. Now, your lack of self-confidence will pop up in your trades. Okay, there'll be a lot of losses, be going out too fast. Because at the end of the day, the biggest challenge on the market is human emotion. Greed on the one side and fear on the other side. So your goal is to be objective. Okay, so you want to be impartial to the trades, unemotional, and things like that. You treat it as a business. So all that kind of stuff you can learn, the trading methodologies and things like that. You need to gain the patience. And that comes with watching and waiting for the perfect setup. We talk about a setup or perfect storm. Okay, and bottom line, you need to have the discipline. You need to stick to your plan. And that's the cliche. A lot of you guys know the cliche: plan the trade and trade the plan. Okay, so that's very, very important. I've learned over the years that sticking to the plan, trading plan, makes you money. Deviating away from it loses money. Okay, so let's talk about money management. We spoke about it already: capital allocation, position sizing. What's important? We're talking about 100,000 rand. You want to use all 100,000 rand for all your positions open. Okay, so I like to trade at least 50 to maybe 50 to 80%. I always like to have 20% in cash. Number one, for the drawdowns, the share price might drop, and that doesn't trigger your stop loss, but on a daily basis, you might have a small losses. But also, you want to be in a situation where you don't have to transfer funds from other accounts, because you're going to get those margin calls, and in the back of your mind, you might be thinking, gee, I'm losing money. Okay, so the 3 M's are very, very important. We spoke already about the position sizing and the stop loss. And the stop loss comes from the chart. So you don't just thumb suck a number. Okay, you saw just now that the stop loss I was using there, that came from the chart. That already the previous low, previous resistance, previous support low. If it breaks below that, I want to get out. Okay. The methodology, and this is what I want to touch on very quickly, go through this very quickly. We spoke earlier on about a trend following, low risk trading methodology. So this is what I call breakout trading, and I've been trading this for years and years and years. Simple breakout above resistance or below support, using chart patterns like rectangles or things like that. That's my favorite, or triangles. Those are the methods I like to use. Courtney Smith, he spoke about channel trading, breakout above a channel, same thing. The whole idea is that you want to identify the candidate. That's the word I was looking for earlier on. You want to wait for the breakout, set a reasonable price objective or price target, allow the market to pull back and retest. You also need to know when your trade fails, cut your losses, get out quickly, but have the patience and the discipline to exit at your target price. For many, many years, I was too impatient. Number one, I was just fearful. I used to get out too early. And I was happy with my 5 or 6%, and the market jumps up 20%. So the main idea here is to be patient. So those are the steps. We'll go through very, very quickly now. The biggest thing now with this kind of trading strategy is the entry point, where I get in. So the main idea here, and I'll bring in my little cursor here, the simplest way, I can bring my pen. Okay, yeah, we've got a sideways market. Okay, the market comes from the bottom and then goes through a consolidation phase. We go between a high and low range. Okay, that's the kind of pattern you're looking for. Consolidation, rectangle formation. Now the market can either break up or the market breaks down. Let's say, for example, it breaks out. That's what you're looking for. That's where you want to go long, above a breakout, above resistance. Okay. If it breaks down short, then we go short. It breaks through support, by the way. Okay. But the main idea is I can measure the distance between these two ranges, between support and resistance. Let's say that's, for example, 5. Okay. That's 5 Rand down here, and that's 10 Rand up top here. Okay. What's nice is, number one, I know the trend. It's gone through a sideways market, broke it out, but continued on its regional path. So this is what they call a continuation pattern. So I know the direction. The direction's up, number one. Number two, with that price range, I know the share price got a minimum target range of 5. Okay? So that gives me my target price. Okay? And also if it breaks down. So the odds in your favor. That's what you want to do in this scenario. Okay, so the whole idea is a breakout above resistance, you open up a bullish position, you go long. If it breaks through support, we establish a short position. Okay, so I hope that makes sense to you guys. Let me just go back to my little cursor here. So that's the main pattern I'm looking for always. That or a triangle. Okay, a triangle it's a bit longer. We're talking about a symmetrical triangle. It goes through consolidation period, but breaks out, but continues on its original path. A smaller version of a triangle will be a pennant or a flat pattern. Those are the most reliable patterns to trade. This is my favorite to look for. And how do I find them? Oops, I must take all this off. I thought it'd be on the next slide. There we go. Take it off. How do I find them? What I do on a Sunday afternoon, I scan my top 100 shares. I use the DMI indicator, and one of the DMI indicators is an indicator called ADX, Average Directional Indicator. So I'm looking for where the ADX is dropping, and ideally below 20. That will highlight for me the shares going into a sideways market. So from that list, I'll do further investigation. Okay, so you got your entry level, and you go on the longs and the shorts. When do you get out? So it depends on how long you plan to be in the trade. And also it depends how much risk you're willing to take. So what's nice about these trades, most of these trades are, as I say, about 12 days. How much risk you're willing to take, you'll have your target profit, your take profit price, and all those exercises we did just now about the MTNs and the Anglo Golds, those kind of things we do, the paperwork before we put on the trade. Okay, common execution areas, we spoke about retracement levels. My favorite is breakouts above support and resistance, but any other technical point. Okay, be it overbought, oversold levels and things like that. Your stop loss is very important. Where do you put it? I'll put it at support level. If it breaks through support, I'm getting out. Okay, and if I'm going long, short, I'll obviously be above my resistance level. And as the market moves up, I'll move my stop from the support level to my entry level. So I'm locking in the prices, and as it goes up higher and higher, I can raise my stop. So it gets to the stage where I'm risking 2% of my capital, but it gets to the stage where I'm risking nothing essentially, because I'm minimizing the losses by raising my stops into profit territory. Okay. Where you want to get out? So the biggest problem with a lot of people, and I've done this myself, we become irrationally attached to a position. We get married to our winners and we snub our losers. We hold on to a position when underlying fundamentals have changed, number one. Number two, we worry or we close out of positions when there's nothing wrong or nothing's changed with the underlying company. The voices are talking. Both these situations, as I say, lead to losses and ultimately missed opportunities. So the whole idea is you want to take your emotions out of your trade. Okay, so those target prices are very important. So in the summary, breakout trading welcomes volatility, and that's one thing I believe this year we're going to see a lot of on our markets. Yes, we're seeing quantitative easing now in Europe. We have a lot of money being pumped into the economies. We'll have exchange rate volatility. We'll have volatility on our markets. You as a trader want to embrace volatility. So volatility is obviously can set your emotions on a roller coaster ride, because obviously prices are moving up and down very quickly, and obviously in a very short period of time. So if you find that's not for you, then you must change your trading strategy. Okay, maybe trading is not for you. Maybe you'd rather be an investor, or rather be a position trader where your view is much longer. Okay, but saying that, using the steps and information covered in this short presentation with the trading plan, you should be able to make greater returns and have manageable risk. Okay, just quickly talk on the trading plan. Why do you want a trading plan? Number one, I find it makes trading much simpler. Okay, because it just eliminates anything that's not important, eliminates your opportunity to make bad trades. Okay, it helps you with the psychology, those voices. Okay, so it acts like a roadmap. You're a personal GPS. This is what I'm getting in, this is where I'm getting out. Worst case scenario, what must I do, and things like that. So it also highlights for you when the trading plan's not working. If the trading plan's not working, then you can adjust. But if you're sticking to the plan, if you're sticking to the plan and you're losing money, then you can adjust it. If you're not sticking to the plan, then how do you know the plan's not working? See, that's where the disciplines are important. So it highlights for you if you're not adhering to the plan. It helps you with your decision-making process. So it tells you this is the price you must get in, that's the price you get in. The price you get out is the price you get out. Okay. So it eliminates those emotional and irrational decisions that a lot of us are prone to do. Okay. So it takes you out of that comfort zone also, by the way. So you stretch. I was watching one of those YouTube videos I mentioned earlier this morning, and one of these guys, top traders in the UK, was saying that only when you have a position open can you consider yourself a trader. Because then you're on the roller coaster ride, you know the prices and things like that. So yeah, but every single trade you learn. And that's one thing about trading. See, every single day is different. You got to learn from those things. Okay. So the whole idea is that the trading plan installs that measure of discipline. So this is my trading plan. I call it my soccer team. I've got 11 players, my team. So number one, know yourself, know your purpose, and that comes to my education, my personal development regarding trading. That's why I do these courses. Yeah, I might be teaching you guys, but I myself attend courses, and I read books, and I listen to webinars and things like that. So I know my limitations. I know where I'm weak on, but I know what my purpose is. I want to create an additional income stream from trading. Okay, what are my trading goals? How much income do I want to make for the year, per quarter, per month, per week, per day? Okay, what markets are you going to trade? In this scenario, we trade in the JSE, and more specifically the top 40 index, and more specifically CFDs and single stock futures. My time frame, most of us will be what we call swing traders. That's what I mean by time frame. It's from 2 days up to 12 days. The tools of the trade, technical analysis charts, live charts, and things like that. What do you do before the market opens? It's part of number 9, after the market closes. What I do in the morning before the market opens, I confirm all my homework from the night before. So I get up early. I'm a morning person. I get up at 4, so it gives me nearly 4.5 hours. Because the futures market opens at 8:30, and at 9 o'clock the equity market opens to review what happened on the Asian markets, what's happened on the US markets overnight. Are my positions still okay, and things like that. So if I had to look at a soccer team, number 6 is my goalkeeper, risk and money management. I don't want to get the goals past me. Okay, so that's my goalkeeper. Number 10 is my captain. So my main goal in life is to become more disciplined. My training strategy, more disciplined in implementing and getting things going. Okay, so your exit strategy is more important than your entry. So where am I going to get out? So number 1, my stop loss, worst case scenario, and number 2 is my take profit. You need to know those levels. Okay, my trading strategies, I've highlighted one for you today, breakout trading. Setups, you want to wait for those perfect storm. Where am I going to get in? Those things I believe is minor. Trading methodology, the M is the least important of the 3 M's. Money management, the most important. You want to be able to stay in the game longer. Okay. After the market closes at 5, we have the runoff and things like that. I'll look at my trades very, very briefly. Ideally, I do it at night. I do a lot of my homework at night. 8 o'clock, I download all my software, check my charts, check if any of my support and resistance levels have been broken, or there any new trades on. When it comes to stop losses, I've got a system. The PhD Online, we use stop losses. I use those systems to help me watch the market. Have any of them been triggered? I've got confirmation in today with an alert on my phone and things like that. Discipline, I spoke before, is sticking to the plan. So these are my little golden rules. Number 11 is my golden rules. There's a lot around money management, and number 2 is the mindset. Warren Buffett says rule number 1, never lose money. Rule number 2, never forget rule number 1. So it's the same thing here. Protect and preserve my capital. That's my number 1 rule. So yes, I'm willing to risk 2% per capital, and I'm never willing to lose more than that. Okay, I always set the stop loss. If I do make any losses, I cut them very quickly. But I also let my profits run. So we have a saying in the market: cut your weeds and let your flowers grow. A lot of us do the opposite. We let our weeds grow and we cut our flowers. Okay. So if you do make a loss and you pull your stop loss, for example, never chase your losses. Okay. Sorry, never average down. So don't throw good money after bad money. I've done this lots of times. So I know this is where I've lost money. And at the end of the day, you're in the game for a longer haul. So if I make a loss today, I cut my losses, I learn from it, I move on. You know, before joining PSG 15 years ago, before we had live trading and things like that, you had to try and make 2,000 Rand a day. Some days I didn't do it. So next day I was trying to make 4,000 Rand. It was too much pressure. Or if I made a loss, I try to make it loss plus my income. Don't do that. Okay? So that's what I mean by never chase your losses, ever. So it's just that adds that emotional burden. You want to have peace of mind. Okay, so that's all to do with my mindset. When it comes to, sorry, that's to do with money management. When it comes to mindset, trade what you see. I'm a technical analyst. I believe the charts. So the charts are falling, the price chart is falling. I believe what I see. I don't go into denial. I always joke and say denial is a river in Egypt, not what you think. So, you know, you might think, the market's wrong and I'm right and I'm holding on to my position. Don't ever do that. And I've learned the hard way to do. If the market's telling you the market's falling, get out, and vice versa. Okay, obviously let your profits run. Keep records. I have a trader's diary. I try and keep records of my trades. With hindsight, I can go back and look at what worked, what's not working, what can I improve on. Okay, maintain discipline. Keep it simple. So breakout trading is simple technical analysis. Plan the trade and trade the plan. That's what we spoke about just now. Guys, I'm running out of time. Sorry, I've gone a bit overboard now. But just a quick summary. Remember the 3 M's, mindset, methodology, money management. The most important, money management. Okay, people are worried about the risk, but if you can manage the risk and pay for that risk up front, then everything else is easy. Okay, so have a detailed trading plan to also help you. It's a work in progress. So ideally you want to get to the stage where you have a one-pager. So that's your trading plan, encompasses everything, and then you have a game plan. What's happened today? Okay. So I hope you've enjoyed today's presentation. Remember, this presentation and the recording will be emailed to you guys in the next few days. So from my side, lastly, before just quickly promoting my events, good luck and happy trading. Okay. So our next webinar is next week, Wednesday. It's more on the investing side. We're learning how to invest like the Warren Buffetts of the world, the Peter Lynch's, Sir John Templetons, and things like that. That's our webinar next week. So hopefully you guys will have another sold-out house. And then in the middle of February, we're talking about, and the big question a lot of people are asking me, should I invest offshore? And the answer is yes, and we're going to talk about that. Okay. Those of you here in Joburg, I did my first Traders Forum last night in Cape Town. Thanks to you guys from Cape Town that did come out. I appreciate it. It was very windy in Cape Town, but I appreciate the support. Next week here in Joburg at the Bryanston Country Club, we're talking about investing and trading part-time. So very similar to the topic we're having today. Obviously, this is more face-to-face, and it gives us that interaction with all those forum members. Okay. But guys, thanks a lot for participating. I hope you enjoyed it. Let me just quickly see if there's any questions here. Thanks. I hope my soccer plan does better than Bafana. I appreciate that. Alexei, do you leave trades overnight? Yes, swing trades are overnight. I hold a position up to 12 days sometimes. So this is not a day trading. Okay. So different strategies. Thanks, JB. Thanks, Jan. Thank you. It was a mouthful. Well worth it. Okay. Under total exposure, that's where I talk about using 50% of my capital on CFDs. So I found that I'll never have more than 5 positions open of CFDs. It's like it's riding 5 horses at the same time. So that's what I mean by having a 50% total exposure to my trading capital. 50 to 80% I'll be using on my capital. I like to have 20% in cash all the time, but that's what I meant by that. Okay, I hope that answers the question. Thank you. Thanks, Tim. Pleasure. Guys, thanks a lot. Cool. Alexi, starting with 15,000 Rand. Yeah, it's a start, but obviously you must understand you'll have less flexibility, number one. Number two, when I say flexibility, you won't be able to trade all the stocks. Maybe start with single stock futures, first of all, because the margin requirement there is slightly bit lower. But yeah, 15,000 Rand is a start. Okay. Surely no problem. Yeah, looks like most of it. Pref shares, I'm sorry, we didn't cover the pref shares today because it's not this topic today. Okay. Okay, Chris, yes, if you guys are new to trading, you've got a lot to learn. It's great. I'm still learning after 25 years in the market, so don't worry. Are there practical examples trading single stock futures and CFDs available? Anthony, not 100% sure. Obviously, when you get this presentation, I'll give you some more information, but you can always drop me an email, go into more detail. Okay, guys, thanks a lot. Appreciate your participation. I'm sorry I got a bit of a time today. And from my side, thank you very much. There's my contact details. You guys drop me an email. There's our toll-free phone number. But I appreciate your time. Until next week, all the best. Enjoy the rest of your day. Ciao for now.